operating risk.
There are internal auditors everywhere, then how did that Vijay Mallya fraud even happen?
Hi there, I'm Rashesh, your faculty for today's session. I'm an ACCA myself since the year 2020. Across these past few years, I've ventured into entrepreneurship using what I've learned during my years in ACCA every day in my venture. Parallelly, I've been teaching for more than 6 years now, having had the opportunity to teach more than 1,000 students across subjects like MA, PM, and APM across all ACCA levels. I am a rank holder myself, having got 3 ranks in my ACCA journey, and I've had the pleasure to teach students, train them to become rank holders themselves, both in India and globally. Learning fundamental skills in papers that you'll come across in your professional level, papers such as strategic business leadership or advanced performance management, you learn the ins and outs, not only, of course, of finance, which ACCA is known for, but also business and leadership. Whether you're interested in going into business consulting or following my footsteps and venturing into your own startup, these things will help you throughout. Like for me, I've ventured into AI, and despite having no tech background, the skills that I've learned help me communicate, help me work with technical professionals, which allow me to go about with my day to day business just as if I were from that domain. So, ACCA is not only a finance profession, but a holistic global profession turning you into a leader no matter what domain or sector you're working in. Today, I want to take up a topic in PM, one of the most crucial topics that you'll come across in your exam, one which is variance analysis. Now, I don't want to start with the fundamentals and bore you with that. I rather want to pose a question for you. And for that, let's share our screen and begin today's session. Have you ever wondered when we look at perfumes, for example, taking an example of a very, very famous perfume brand, Armani? Why is it so that typically, if you go to buy the branded perfume, it costs you about, let's say, 5,000? And when you talk about the same thing, you must have come across reels on Instagram or maybe local vendors selling the same exact scent, the same exact quantity, but at 1/10, or maybe let's say in this case around 500 rupees. How is it so that the official brand is selling a perfume at 5,000, but a knockoff, a copy, a clone, but everything same in terms of scent and quantity is able to sell it for 500? Why is this happening? Now, maybe odds are the first thing that comes to your mind is, sir, of course, they have a bigger brand. They're going to charge a bigger sum. They have the right to demand 5,000, even if the cost of production will be similar. But think a little deeper. Is that really the case? Let's say our selling price is 5,000 for the original one, 500 for the knockoff. And let me take you one step forward. Let me say maybe the cost of production is, for the branded one, let's say it's 2,000, and for the knockoff one, it's 400. Now, if you're comparing, of course, the knockoff costs cheaper and they are able to make lesser margins because they are not the brand. So your brand point is incorporated. The brand is making a larger margin, 2,000 product cost, they are selling it for 5,000, they are making more money. But the question still remains, why is it costing more for a larger company, a company which should ideally have things that we've come across and we've learned, right? Economies of scale. They are the ones who should be getting that benefit. They are the ones whose cost of production must be less. But why is it so that the knockoff is costing, in this case, 1/5 the price? Again, you may have thoughts in your head. You may be thinking that, sir, they use better packaging, their logistics are more complicated, they have other things to do, they have shops to run. But remember, we have included all of these things in the cost of production. Remember, cost of production, something that you learn in your management accounting fundamentals, is each and every cost included to get a product from its state of raw material to a finished good in the hands of the customer. So you have your material, you have your labor, you have things like electricity, packaging, logistics, your sales incentives, whatever they may be. All of these become part of the production cost, the cost of making and selling and distributing a product. So a question still remains, why this gap? I encourage you to pause at this point if you want to think a little bit longer, but in case you're ready to talk forward, let's discuss this further. What is the main difference? Simply put, oversimplifying the scenario, a perfume has only two ingredients. It has your scent, and either it has an alcohol base or a water base. Let's say most perfumes have an alcohol base. So an Armani perfume, in our case, let's just say simply the cost of scent, which is the real deal. In this case, say these are 100 ml bottles. Both of these are 100 ml bottles, like we said. The quantity is exactly the same. Now, typically, the real cost comes in formulating these scents. The real cost comes in, well, making these scents. So let's say the cost of purchasing, acquiring these scents is 40,000 per 100 ml. Now we can put things to perspective. What differs in this case is the mix. Let's just say I take this 40,000 rupee scent and I use 5%. Typically, in your perfumes, you have 5% of the scent and 95% alcohol to make it into a perfume. So if I buy the scent for 40,000 and I use 5% of it, that's where I already get my 2,000 rupee cost. 5% 40,000 is 2,000. But what the knockoffs do, they already know what the scent is. They buy the scent once, then they remake the scent. Now the scent for them as well is the same exact thing. It's the same exact cost. But where it differs is instead of maybe using 5%, they use only 1%. So let's write this down. Maybe Armani uses 5% scent and 95% water or alcohol, and that costs them nothing. The main cost is what comes from the scent, so their cost is already covered. Whereas a knockoff uses the same exact scent, but instead of more in the mix, they use less in the mix. 1% of 40,000 comes to 400, and 99% of it is water, allowing them to get to the same kind of smell, but a much less, let's just say, potent smell. If I put the original perfume, maybe it will last longer on me. If I put the normal perfume, maybe it will last lesser. Which one am I exactly using? That's just a secret we'll never know. But for now, let's go a little bit deeper into this concept. This is known as material mix. Why is it important? Well, of course, I gave you two different examples here. I spoke of a knockoff and the original. But did you know, and of course, it's no surprise, most of these large conglomerates, most of these brands don't actually produce the goods themselves. They have third-party vendors who have all the necessary expertise, huge factories, warehouses to be able to deliver on such scale and volume of the demand that these companies cater to. Now, imagine that Armani has a factory in, say, China and another factory in, say, Vietnam. All the quality control things that we talk about, something that you will go deeper in and learn in subjects of audit, this is where it comes to. This is where the calculations work out. Now, imagine the factory in China is using the same composition, 95% alcohol, 5% scent, and they're making the right one. But the factory in Vietnam maybe is using 96% alcohol and 4% scent. Now this, while it may seem like a small number, like I already showed you, the scale, the quantum is much more. The customer can potentially tell the difference. The brand reputation can potentially get damaged. So these companies cannot afford it. That's the reason why they do variance analysis. Before I go forward, I want you to take a step back and think over this. During your ACCA journey, you don't only look at the numbers behind it, you don't only look at the calculations that earn you the marks, but this is the critical thinking aspect that you're encouraged to develop. This is what is required to crack your P-level exams. This is what is tested frequently in papers like PM, papers like the one that we are learning for today. You need to understand that it's not just 2000 versus 400. You need to understand it's not just what meets your eye in terms of production costs. It's a lot more that always keeps coming. Every single topic, in fact, in PM is often linked to business fundamentals. That's why this paper has a lower pass rate, because it encourages you, or rather, it forces you to develop your critical thinking skills. So, for today's takeaway, we now understand why companies, or let's take simpler examples, take Indian sweets. How is it that someone's selling something like a Kaju Katri for 2000 rupees a kilo and another one for 200 rupees a kilo? All of these things, once it makes sense to you, follow the same pattern. The material mix that is used to arrive at these formulations largely differs, but to the naked eye, to someone who doesn't know the difference, it's all the same. But to you, who's a professional, who'll be employed to look into these things, investigate, find out the right reasons why things are happening, you will make a lot of value with this. So, to summarize, we've learned what material mix is. Let's understand how it fits into your whole material chain. Odds are that in your management accounting, you've learned your basic material variances, which is material price variance and material usage variance. If not, let's do a quick summary. Your cost of your materials can differ for two reasons. One, either the price per kilo of your raw material changed and hence your overall end product ended up being more expensive or more cheaper, or you ended up using more or less quantity and hence your end product cost ended up being cheaper or more expensive. But in advanced variances, the topic that we are focusing on in PM, material usage variance is investigated further. In material usage variance, we look further in material mix variance, what we just discussed, and material yield variance, right? So we already understood what material mix variance is. Let's talk a little bit about material yield variance. What is yield? The yield word is typically associated with things like agricultural production or production in general. Yield means how much did I expect to produce versus how much did the crop yield, right? So even here we are thinking in the same lines. We're thinking that how much material input was required or was put and how much did the output yield. Because typically you can imagine a factory flow where your materials are passing through several layers of machinery and packaging and all these things. And typically, a little bit of material is often wasted or in the process. In fact, for our perfume example, imagine a factory flow. Imagine how in a factory, your products moving through several layers of machinery, getting packaged, and at the end of the day, we're working with liquids. It's possible that some of it gets left back in a drum. It's possible there is spillage, evaporation, and so much more. So if I input 100%, maybe the output is only 95%, 5% is wastage, something that we often account for. But when we change the mix of our product, the yield also often has a connecting impact. Say, simply think, if I put more alcohol percent, and alcohol is notoriously known to be something that evaporates in high heat, my yield will suffer. If I use less alcohol, maybe my yield will improve. So it's this balance that you look at, you investigate in your material mix and your material yield weights. If that concept makes sense to you and you are done, let's move forward together and tackle a question which is tested in your PM section C, of course, on the topic of weights. So I encourage you to do this question with me parallelly so that you are also getting the first-hand knowledge, and together we can work through this question and many more. So let's jump on to one of the fairly recent, of course, not recent anymore, a question from 2018's PM exam, Kappa company. This is a question that should be available in any kit that you're using. So this question, and of course, with any question, we look at the requirements first. So here in this question, for a good 20 marks, it's asking us the following for sub question A. calculate the following variances for last month. The material usage variance, so the base variance will also get revised, and the material mix variance, and the material yield variance. Now imagine 11 straightforward calculator marks on offer for this question. And part B, for 9 marks, they want us to give you commentary on the problems with whatever system they are using of calculating and reporting variances for assessing the performance of their production manager. So we'll split our logic in both of these sub-requirements. First, focus on sub-requirement A. So let's look at the question. All right. So at this point, I'll encourage you to pause your screen, read through the question once, and then we'll proceed solving the question together. All right. So hopefully you've read the question. A few things that I want you to pay attention to. Typically, your questions will cover everything that you need for all the sub-requirements. So let's segregate and compartmentalize the question. So the last part at the end of each month, this information is mainly relating to the sub-requirement B. So we'll park it for a little bit later. Let's focus on the main information that will allow us to proceed with our calculations. Now, what they've given us a standard material cost for all 100 kilos of omega. Omega requires 3 input products, alpha, beta, and gamma. It requires 120 kilos of input, but you'll notice that it only gives out 100 kilos of output. So there is a little bit of material lost, and they've already said that the mixing and the heating process is subject to a standard evaporation loss. They've also mentioned how the prices vary, but we are not looking at the price side of it right now, because if you recall, that fits in your material price variance. We're looking at the other side, we're looking at the material usage variance. So last month, 4,600 kilos of omega was produced using the following inputs. So why don't we just write this? Let's start there. Let's just say that our actual production of 46 kilos required, let's write alpha, beta, and gamma. The quantity input is already given to us in question: 2200, 2500, 920. They've given us the cost per kilo: 1.8, 6, and 1. And they've given us the total cost, which we can also multiply and get to ourselves. All right, let's make this look a little bit cleaner. All right, so for our actual production of 4,600 kilos of omega, it cost us $19,880. What should it have cost us? So let's prepare that as well. Now you'll remember another fundamental principle in your accounting, which is the matching concept. For any computation to be a fair comparison, we need to match it to its base. I can't compare 4,600 kilos of output to 100 kilos of input. Of course, everything will look expensive. But if I compare my budgeted cost of 4,600 kilos with my actual cost of 4,600 kilos, I'll have a fair comparison. So what should be my budgeted cost for 4,600 kilos? Let's do the same thing again. We have the 3 inputs. So from our base, we know that for 100 kilos, we need 40 kilos of alpha. So I can just do 40 divided by 100 multiplied by 4,600 cross multiplication and see that I needed 1840 kilos of alpha. Similarly, I needed 2760 kilos of beta and 920 kilos of gamma. So I needed 50 by 20 kilos, but I ended up using 56 20 kilos, 100 kilos extra for the same output. That's 100 kilos worth of inventory wasted. Let's further investigate. Of course, the cost is given to me. We'll assume in the budget that it remains the same. So how much should this have costed us? So it should have costed us $18,400. It costed us $19,880 or more, sorry. It costed us $19,880, a significant chunk. So let's start with our part A, which is material usage variance. So how do I calculate my material usage? Simple. It is nothing but the difference in usage multiplied by budgeted cost. Now you may be wondering why we are taking budgeted cost and not actual cost, because isn't it better to report everything on actuals? Remember, this is the total variance is going to be explained by both your price variance and your usage variance. Right now we are focusing on the usage variance. So the difference between your budgeted and your actual price is often or always tackled by the material price variance. So for material usage variance, we take the budgeted cost. So alpha, we were supposed to use 1,840 kilos, but we ended up using 2,200 kilos. So we used 360 kilos more. But that's a bad thing. So that's a adverse variance denoted by A. But this is 360 kilos. You never report variances in kilos. You report, because otherwise something will be in kilos, something will be in liters, something will be in number of employees. It'll be a mess. Every single variance is always reported in its dollar value. So let's, of course, multiply it with our budgeted cost, which is 2. And we have our complete variance. Same thing for the other two. I was supposed to use 2,500. I used 27. Sorry, my bad. I was supposed to use 2,760, but I only used 2,500. That means I used 260 kilos less, which is a good thing. And I saved my company $1,300. And the last one, I was supposed to use 920. I ended up using the same 920. So no variance for the third material, which is gamma. Of course, this is more than my adverse variance. So my overall usage variance is favorable at 580 tons. Right? So with that requirement done, let's close this question and use and test out our knowledge that we've acquired for our mix and our yield variance. Let's see it in action. So simply put, if we are going to be right, how do we know that our question is correct? Like we discussed, material mix and yield variance are subsets of your material usage variance. So now when we are about to calculate our yield and our mix variances, they both need to end up adding up to the same $580 favorable. And then we'll automatically know we've done it correctly, and we'll have 11 marks in the bag. So let's focus on it next. For that, we need to introduce the same thing that we did. For perfumes, we said 5% and 95% split. Even here, we need to check that what exactly is our split between the three products. So I'll just take a shortcut. I'll copy this again. But besides quantity, we'll introduce a new term. What we've already learned, the mix. Let me format this. So simply put, it's a basic 100% check. If 5520 is 100%, how much of it is alpha? 33%. How much of it is beta? 50%. And naturally, gamma should be about 17%. You can put this in decimals, you can put this in percentage, whatever helps you understand it best. Let's put it in percent with a decimal. So this is what we expected. We expect 50% alpha, 50% beta, and 16.7% gamma for our products mix. Let's see if the actual mix changed. So again, I'll copy the same thing. I'll introduce a mix column. So let's check what our actual mix ended up being. So I used 39% of alpha. I used 44% of beta, and same still 16.4% gamma. Again, these will also add up to 100% or in your decimal as 1. So one thing is clear, the mix was changed. Is it possible that because this mix was changed, our output changed? Maybe we ended up losing more material? Of course, we need to investigate further. So let's prepare our final column that will help us complete this whole thing, which we call as the standard mix. What is the standard mix? I am asking myself a hypothetical question. What if for my actual quantity, I had stuck to my budgeted mix? If I had stuck to it, what would have happened? So the same exact thing we're going to do one last time. Let's do it. Again, we'll have quantity, mix, cost, and like the question says, what if I used my actual quantity? So what if I use my actual quantity, which is 5620 kilos, but I used my budgeted mix. I followed, if I was disciplined enough to continue using my same mix. So now it's a matter of reverse calculation. What is 33% of 5620? What is 50% of 5620? And what is 16.7% of 5620? Now you can leave this in decimals, you can leave this as a roundup, because technically these are in kilos. So 0.3 kilos would be 300 grams, so on and so forth. Your examiner would not deduct any marks just because you did any rounding incorrectly, as long as, of course, you're not going over the moon. We'll continue with our budgeted cost because we are in the hypothetical scenario that this is our budgeted mix. What would it have cost us? So you can see a very interesting picture come up. If we had stuck to our guns, if we had stuck to what we already know, it would have costed us $18,700. Still a little bit more than our budget of $18,400, but definitely not closing on $20,000, which is almost $1,600 more, about 4 or 5% more than our budget. But this is not it. We are yet to calculate our variances. So one shortcut that I tell students to do when they are calculating these variances is, rather than looking at 3 tables at a time, look at only 2 tables. So say, for example, let's not look at the budgeted side for now, and let's check our material mix variance. It's the same exact calculation that we did, but for material usage variance, we compared our budget with our actual. Here, we'll compare our standard card with our actual. So what's the variance like? Nothing changes in the formula, guys. So it's the same exact formula, the difference in usage multiplied by my budgeted cost. So same thing, tell yourself, if you're confused, think of it as the standard mix as your budget now. Left hand side budget, right hand side actual. So I was supposed to use 1873. I ended up using 2200 kilos. So that's an adverse variance. I was supposed to use 2810 kilos, but I ended up using 2500 kilos. So that's favorable. And I was supposed to use 920, but I ended up using 920. So that would, of course, come to, oh, sorry. I was supposed to use, I did not blur one extra column, but yeah, let's focus on this. I was supposed to use 936, but I ended up using 920. So that is, I ended up using less of it. So again, that would be favorable. So my favorable continues to be more. So it's a favorable material mix variance of $913.33. What does this mean? Critical thinking hats on. You need to think why you got a favorable variance. If you look at the numbers, you will see that your beta product was the costliest product. Product costs you $5 per kilo. And surprisingly, that's the product that you were supposed to use 50%, but you only ended up using 44%. So you used less of the more expensive product and you ended up saving some money because you essentially made your quality probably a little bit poor by using cheaper materials, more of a cheaper material. All right. At this point, I should also clarify, in fact, something that I should have told you earlier, is that your material mix variances only apply to products where your products can be physically mixed. If you take an example of a mobile phone will always have one battery, one display, one touch unit. It will not have two batteries and maybe they forget a touch unit. That can't work. These variances only apply to products where the materials can actually be mixed, like a perfume or like pizza or like any food product or things like that. Things like chemicals, raw materials, etc. are all getting mixed. All right. So here, instead of using appropriate quantities of beta, I used less of it, ended up getting a favorable variance. But that often always means that your yield would have suffered, and we'll check for that next. So let's bring back our banished friend. We'll make it visible again. But to keep it simple, let's discard our actual figures and focus on these two tables for. So your material yield variance, which we are predicting should be adverse because we've used a poorer product more. Let's see what picture it tells us. So here again, we'll simply compare budget, the left-hand side, with our standard, the right-hand side. So the comparison is between budget and standard. And again, if you notice between these two variances, one is budget versus standard, the other is standard versus actual. Standard on both sides gets cancelled out, and you end up getting your original budget versus your actual comparison. So our variances. So same exact thing, guys. We were supposed to use 1840 kilos. We ended up using 1873. So we ended up using more of something that's adverse. We were supposed to use 2760. We ended up using 2810. Again, we used more than what we needed. So that's adverse. And we were supposed to use 920, but we ended up using 936. So again, that is, we used more of everything. In fact, we used 100 kilos more of everything. And that adds up to $333 of an adverse material yield variance. What does this mean? Let's check our net variance. If we've done this correctly, our net variance, which indeed we've done correctly, does come to $580, which, if you pay attention to your original variance, is the same as your material usage variance. So our question is done, 11 marks in the bag, but let's just discuss this for a minute before we conclude. What does this mean? What are our takeaways? Our takeaways are that often, always, if you change the mix, if the mix variance is favorable, often your yield variance is adverse because, like we discussed already, and also the vice versa. If you use more of an expensive material, often your yield also improves, but your mix variance is adverse. Now, this is not like a fraud or anything too wrong. This is often something that happens because on the day, imagine yourself as a factory operator. On the day, maybe some material is available less, or maybe you want to experiment, you want to see what will happen if I change the mix a little bit here and there. This is what results into that. Now, some companies don't want this experimentation, some do. Some companies often ensure that you should not have shortage of materials to end up doing this. Sometimes it happens. But when it happens, you can then investigate. Is the quality of this outcome? Because at the end of the day, net, you ended up saving $580 for the same amount of output. Is that worthwhile doing so or no? And of course, the total costs need to play a role in that comparison. In this case, of course, odds are that you wouldn't end up doing this because a $600 saving in your material usage is not compensating for the $1,600 increase in overall cost. But remember, in ACCA, no question is complete only with the financials. Always, always, always look at the non-financial lens, such as what we discussed in our example of brand image, reputation, product quality, compliance checks. All these factors also play a role in determining your overall suggestion and shaping your answer. I'll see you in another lecture. I'll see you in another question where we go deeper into these variance topics. Thank you.